Bloomberg's world headquarters in New York, I'm Katie Greifeld, in for Matt Miller.
And from our studios in Washington, D.C., I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Coming up, the chill of the crypto winter hung over last weekend's Bitcoin bash in Miami. The faithful say digital assets are here to stay, even as Washington continues to draw battle lines over regulation.
And Wall Street veteran Caitlin Long is one of the crypto leaders on the front line. She'll join us to discuss the path ahead for Custodia as U.S. regulators close key doors to the banking system.
And artificial intelligence is getting more buzz than Bitcoin lately. We'll decipher the AI hype with Kavita Gupta of Delta Blockchain Fund. So all of that is ahead. But first, let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. That is your function. And what you will see broadly, it is an update for digital assets. Right now, Bitcoin is up about 1.25%, trading around $27,200 or so dollars. And you have the likes of Ether, Solana, and Polygon all up in the ballpark of 1.8 to about 2.25% in the case of Solana. Interesting to see that digital assets are rallying on a day, Katie, in which most stocks actually are lower. Of course, we're still paying attention here in Washington to the drama over the debt ceiling. House Speaker Kevin McCarthy was just speaking with reporters saying that he hasn't talked to President Biden yet today, but they will keep working until a deal is done. Until a deal is done, though, I do wonder if it is going to be benefiting the crypto world and less so other risk assets. Katie, definitely a dynamic to watch.
Definitely a dynamic to watch. But before we get to the X date, let's talk about the past weekend, because Bitcoin enthusiasts gathered in Miami Beach over the weekend for one of the industry's biggest conferences to commiserate, but also to celebrate getting past last year's string of calamities. Mike McGlone of Bloomberg Intelligence, he was there. He joins us now for some of the highlights from the event. Mike, it's great to see you. You've had a few days to digest. What were some of the key takeaways from the past couple days?
Well, hello, Katie and Kaylee. I like to say that together. It was obviously much less subdued than last year, which meant there was less retail hype because it's really a retail event. So I kind of enjoy that. Fewer lines. But the thing I really noticed is there was a proliferation of professional women. So I kind of walked by the blockchain breakfast for women group. It was completely packed. So it's good to see that. I really enjoyed some of the professionalism, like from Cynthia Lummis being interviewed by Perrine Boring. That was very good. And one thing that's really notable that didn't happen last year is I met a gentleman, a person I know who works at MasterCard for cryptos LATAM. That position didn't exist a year ago. So it shows it's going to the mainstream. But I did kind of test people a little bit. And when I came out with a bearish view on crypto, they gave me the wide eyes. They were so much shocked, which kind of honed my view that I think people are a little bit too optimistic about where prices might be going still.
So is it still, Mike, the sense of to the moon, everything is fine, even after everything we have seen between the last Bitcoin conference in Miami and this one in 2023?
That's the sense I got, that the worst is over after the big collapse last year with FTX. And that's where I'm concerned. You see it in all markets, obviously cryptos, but the worst is over, which means me to translate, well, cryptos are the riskiest assets. Bitcoin's the least risky. And when people say the worst is over, that's when my contrarian tweet comes out, well, maybe it's probably not a good sign yet.
Well, let's talk a little bit more about the price, because Bitcoin, as we know, it got above 30,000 last month. Now it's hanging out around 27,000, give or take. What's your outlook for what's next when it comes to the actual price of Bitcoin?
I think risks are down. It hit a pretty good ceiling around 30,000. So did Ethereum, pretty good ceiling around 2,000. And at the same time, the thing is, all risk assets went up. The Bloomberg Galaxy Crypto Index is up 50% this year. The Nasdaq's up 25%. So that beta is about 2 to 1. And the Fed is still tightening and has said they're going to keep tightening. To me, the risk is everything tilts back downward. Cryptos lead the way. The key point is Bitcoin's the least risky crypto. But I don't like to be bearish. I like to be factual. I think things are going. I fully think the risks are still tilted downward with this ebbing tide and with the stock market.
All right. Bloomberg Intelligence's Mike McGlone down in Miami, Florida. Thank you so much for joining us. And while Miami continues to embrace crypto, Washington is wary. Last week, Nick Carter of Castle Island Ventures discussed what he calls the coordinated attack on the digital asset industry.
What's colloquially referred to as choke point 2.0, that's still very real. Crypto firms continue to have an extremely hard time getting access to banking. especially transactional or FBO style accounts. Crypto firms continue to look desperately for banking connectivity, and the major banks, that the few outstanding banks that openly service crypto, are under pressure. And there's been other forms of harassment against those banks, like Cross River just recently. So certainly not over.
Joining us now to discuss further is Caitlin Long. She is founder and CEO of Custodia Bank. Earlier this year, of course, the Fed turned down a bid by Custodia Bank to get coveted access to the central bank's payment system. And we should also note, Caitlin, that you were among the attendees at the Bitcoin conference in Miami. So great to have you on the show. Thank you so much for being here. On the subject of that rejection from the Fed, what is your next step forward? Are there other avenues to explore to get the federal regulatory nod here in the U.S., or is this it?
Oh, gosh, there are many. One of which is that Custodia, it is publicly disclosed, filed suit against the Federal Reserve last June, and that is ongoing. And ultimately, the question becomes, do the states have the right to charter banks, or does the Fed, which voted itself a veto over state bank chartering decisions, is the federal judicial branch going to uphold that veto, which has historically never existed? And crypto seems to be the place where this is going to be tested in the courts.
Yeah, and of course, there is the huge question around Wyoming looming over this, Caitlin. But also, the Fed had flagged issues with your risk management framework. To quote directly, they said it wasn't sufficient to address concerns regarding the heightened risks associated with your proposed crypto activities, including the ability to mitigate money laundering and terrorism financing risks. Have you adjusted your framework, your business practices at all in response to this?
Oh, sure. Yes, definitely. But here's the interesting thing. It gets to what Nick was saying. The Fed had never publicly, until the Custodia order, stated that it was opposed to the use of open public permissionless blockchains. Now, it's interesting because it approved the use of open public permissionless blockchains for large banks, but it doesn't want to let any challengers in to challenge the incumbents, it would seem. But it's the first time that the Fed has actually said that unless every owner of every wallet can be identified, that it can't touch the banking system. Now, that was the first, as Nick pointed out in your prior clip, that this is very real, that the Biden administration is executing an all-of-government crackdown on the crypto industry and trying to shove it all offshore, while letting the large incumbents who have been approved to continue for now. But to Nick's point, definitely they're under pressure as well.
Caitlin, I want to return to a point that you made in response to Kayleigh, that you have adjusted your business practices in the wake of this rejection from the Fed. Do you get the sense that it'll ever get over the line, or is it going to take new leadership at the Fed, at U.S. regulators, to ever get any meaningful movement on some of these proposals?
Well, we know in the case of Custodia that the White House was involved with the denial back on January 27th. We know that because it had been leaked a couple of days before the Fed voted on it, that our application was going to be voted down. And within hours of us sending a letter to the general counsel of the Fed, a reporter was reading it back to us. Okay, so these kinds of situations, we knew this was very political from the beginning. And to be clear, Custodia is not taking third-party deposits yet. We have pivoted our business model. And stay tuned. We don't have any announcements yet. But unfortunately, what happened is that this became very politicized. And it's sad because I don't see this as a political issue. In fact, one of the things that happened at Miami is that you had 4 actual or potential presidential candidates from both sides of the aisle speaking in defense of digital assets. It tends to be more of a generational divide than a divide across traditional political lines.
So, Caitlin, it sounds like Custodia is still continuing this fight, but coming off of the Bitcoin conference down in Miami, do you get the sense that some of your peers might give up on the U.S. altogether, maybe look for friendlier regulation in other markets?
Oh, no doubt. Many have. And part of the reason why we're so widely supported by the industry is because we are fighting. Many others for example, we were asked to withdraw our application by the Fed at the same time as applicants to the OCC, which is the federal banking regulator, were asked to withdraw their applications, right? All applicants have due process rights, and yet we were all asked to withdraw our applications at the same time. We have that in writing from one of the reporters. Okay, so so all of us have been effectively denied one way or the other, and Custodia is the only one fighting. And so one of the interesting things is that the industry is really rallying around us because of the pending lawsuit and the fact that we stood up and said, no, this is not acceptable. We do have due process rights. And if we step back and say from a policy perspective, what is the right answer here for the United States? The last thing it should be doing is shoving this all into the shadows. FTX was an offshore, not a U.S. regulated entity, and that's where the fraud occurred. We need U.S. regulated entities to prevent that kind of fraud. Excuse me.
Well, of course, Caitlin, it's not just the collapse of FTX that is haunting the regulatory bodies here in the U.S. In theory, it is also the failures of banks we have seen over the course of recent months, Silicon Valley Bank and Signature Bank and Silvergate also, I would mention. So as we talk about that list of banks that failed, all of which did have exposure to crypto depositors, what banks can step in and fill that void?
Well, there aren't many. That is one of the issues. Sorry for the coughing spell here.
It's okay. If you need a minute, that's all right.
Sorry about that. There aren't many. That's the issue. But one of the things that I learned in Miami is just how many offshore banks are providing U.S. dollar services to the crypto industry. So the federal regulators are cutting off their head to spite their feet. I just use the wrong analogy, but you see the point. Their strategy is to try to kill it. And in fact, all they've done is push it into the shadows and push it offshore, which means that they're going to be playing whack-a-mole because this is not going away. And so you will continue to see the fraudsters operating. And I just heard yesterday about a terrible case of someone who was defrauded, outright fraud in DeFi. And it was onshore in the United States. And it's really sad because if we had regulated entities, that person very likely would not have been defrauded. And so specifically the Biden administration's policies have created is a situation where the only ones that operate in the United States are those operating in the shadows. Everybody else is under pressure to leave, only a few of us staying and fighting. And yet the risks that they portray as being so risky, which is the connectivity to the US dollar system, it's happening. It's just happening offshore and outside of their vision and their regulatory purview. And so it's going to come back onshore to haunt them. History will not be kind to this regulatory crackdown. The better approach is the approach that, ironically, all of the prospective and actual presidential candidates, again, from both sides of the aisle who spoke in Miami, said we need reasonably enabling regulation so that this industry can exist in the United States. And that's where naturally most people will end up going instead of where we are now, which is it's all offshore and in the shadows, not entirely offshore, but increasingly being shoved there by the Biden administration. And as a result, the biggest grifters and criminals are able to pick off, unfortunately, innocent victims in the United States. It's brutal. And those of us who've been around this industry for a long time very much are dumbfounded by the crazy strategy of the policy here, which is the exact opposite of what it should be doing, trying to bring all of this into lit regulated markets.
All right, and we will be staying on top of the regulatory developments here in Washington. Thank you so much for joining us, Caitlin Long, Custodia Bank CEO. Appreciate your time. Now, coming up, we're going to be speaking to Kavita Gupta, Delta Blockchain Fund founder and general partner. And of course, to access all of the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
one way that AI and blockchains can interact is the openness and transparency of blockchain systems can allow AI to actually prove that blockchain financial products are more secure and reliable. Otherwise, we're looking at using an AI for risk management in relation to bridges, moving tokens across different environments, and also just risk management in general.
That was the co-founder of Chainlink discussing the use cases of artificial intelligence in blockchain technology. And joining us now for more is Kavita Gupta. She is founder and general partner over at the Delta Blockchain Fund. Kavita, it's great to have you in person on set. And just following on that point, when you're evaluating companies, what does the Venn diagram between blockchain and artificial intelligence look like right now?
It looks like 20 pitches in a week right now. There are definitely very important use cases, right? When you're talking about security, blockchain has always created its name saying it's way more secure than the current option. Now you put AI-driven DeFi products, or even central bank validity of your identity if your credit card has been, has been exploited or something. If you have a blockchain technology along with AI, it's also going to tell the behavior of certain people whose Coinbase accounts or different accounts keeps on getting exploited. So security is a big one where I feel like AI and blockchain can come together. Supply chain, healthcare industries, anything which has a traceability associated with it, AI definitely gives you more data. To tell you these are the patterns, and blockchain can be much more efficient with respect to security, or if in case there is any sort of exploit. But apart from that, the ones which I see a quick use is a lot of blockchain companies have started using ChatGPT, or at least experimenting with ChatGPT with respect to their back-end operations. A lot of coders are working with it. A lot of customer care services are already working on it. We actually tried in-house to do a research paper on MEVs and different things, looking at it. And we were very, very fascinated. It wasn't perfect for us to release it, but it was very much interestingly there that we have a joke inside, the researchers are going to lose their job. I don't think so, but that's just a joke.
We have that joke in journalism, too. Actually, I don't think it's that funny. But in any case, the fact that you're getting 20 pitches a week, sounds like you're a busy woman. How does that compare to 6 months ago, to a year ago?
I think every time we had 3 big, pointers last year, wherever you want to go, from Luna, FTX, 3AC, and then keep on going down the hill. But I think with every match, valuations did come down, but it also cleaned up only 5 to 10% this time, when I would say the founders completely disappeared. We feel this is the first time after the last 2 cycles when we didn't see a lot of founders disappearing, but we saw for small amount of time, VCs being very smart, or they halted for a little bit to see, is the market going to correct itself with respect to valuation, the raise, the riskiness of it. But right now, I mean, if you just see today's report, there has been like 2 or 3 fundraising. We have actually participated in a couple of rounds. We have been closing deal almost every week, but we have seen oversubscribed rounds, right? One of the companies I'm very, very excited about, we are closing, it's already oversubscribed to 2x.
And as you are evaluating these pitches and deciding what companies to invest in, I would point back to a great piece Bloomberg put out last week about governance issues at some of the top tier crypto companies. How do you evaluate that when there isn't necessarily a lot of regulatory traditional metrics to go by when it comes to some of the governance practices at these firms?
So it's a very good question, Katie, and I feel like governance is a complicated stuff, just not because it's crypto. Also, when you are investing in a company which is a 3-person's company, right? So whether it's a corporate governance, which is just going to be probably going to follow your corporate strategy, but when it comes to regulatory part of it, I think like everyone, we are waiting to see if there's going to be a clarity from US government. The thing which we have learned, at least on treasury management, is one of the things in diligence which we never really asked, and I'll be honest and open about it, is once we have invested, we have taken monthly updates, but we have not really pushed them to say, hey, you raised $5 million, $6 million. Are you actually just buying Bitcoin and Ether out of it and trying to make some money, or where is it really going, and how much reserves do you have? And I think most of the investors now are asking them a quarterly treasury updates. Even if there is a diversification, what does that mean to the company's 2 years plan or 1 year burn rate? And I think that's a big act.
Kavita, gotta leave it there. Really great to get some time with you. That is Kavita Gupta of the Delta Blockchain Fund. And still ahead, crypto startup Prometheum says it's found a way to register with the SEC. More on what that means for the industry next. This is Bloomberg.
This is Bloomberg Crypto. I'm Caitlin Lyons in Washington with Katie Greifeld in New York. Now to the crypto stories that caught our attention this week. Hong Kong has announced a new framework allowing retail investors to trade digital assets. Individual investors can buy and sell larger tokens like Bitcoin and Ether on exchanges licensed by the Securities and Futures Commission beginning June 1st.
And Tether's growing market cap amid falling trading volume raises questions around that stablecoin. That's the view from data provider Keiko. The firm highlighted the lack of correlation between this year's market cap and trade volume, saying, quote, because trading is Tether's dominant use case, one would expect a positive correlation. This comes as Tether's value hovers just under last year's peak of $83 billion, according to CoinMarketCap.
And crypto startup Prometheum Ember Capital says it has received the first special purpose broker-dealer license under the SEC guidelines. This would allow the firm to safekeep crypto securities on behalf of its clients as a qualified custodian, according to Prometheum. The approval, however, does not allow the firm to support Bitcoin. And Katie, this story is fascinating to me because I have heard so often that the SEC says come in and register and you can't do it. Maybe you can, there's just a hitch attached.
And we've spent, the last 30 minutes talking about perhaps companies moving away from the U.S. to friendlier jurisdictions. But here may be a sign of light, maybe a ray of optimism that it is possible.
Yeah, we'll see if anyone else can accomplish that. Katie, thank you so much for stepping in today. Really great to have you. Matt Miller is going to be back next week. We'll be speaking with Antonio Juliano, the founder and CEO of crypto exchange DYDX, as well as the co-founder and COO of Magic Eden, the NFT marketplace. So stick with us. Join us next Tuesday at 1 p.m. This is Bloomberg.